Time now for an in-depth look at the market news today, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, thank you for making time today.
Thank you for having me today.
U.S. stocks down an incredible 13%, the worst percentage-wise since Black Monday in 1987. Some of that due to fear prompted by the Fed lowering rates to zero and injecting hundreds of billions of dollars into the economy. So there's so much going on here, Mr. Yu. What do you make of it?
Yes. As you know, the Fed cut the interest rate by 1 percentage point and also decided to do QE of $700 billion worth of the quantitative easing. Even though such aggressive measures were announced on Sunday, the actual Monday market crashed. If you look at the decline, as you said, it was the most severe decline that we have seen since 1987 crash. Dow was down 12.9%, S&P was down 11.98%, Nasdaq was down 12.32%. The main reason for this is because I think that what market is asking for is a more aggressive quantitative easing story. Obviously, they're looking for some kind of liquidity injected for the corporate bond side and the commercial bill side. Without that mentioning, the QE buying only the mortgage-backed securities and the government bonds, it seems that people are concerned that this will not be enough. However, though, if you look at the measures that and the comments that are coming out from the Fed is that they are willing to do QE infinity, basically. They will do whatever it takes to make sure that the Treasury market functions normal. And also maybe there is even possibility that they might do some kind of measures for the corporate bond side and the commercial bill side, just like what Japan does and the European central banks do. So clearly people were concerned, but if you look at the futures market for U.S. now, it is limit up again, or an exact opposite of yesterday. The reason for that is because people are expecting that the Fed will do more than what's been told. Also, the monetary policy is important, but in addition to that, fiscal policy is most important thing because of the stores shutting down, and obviously you need more money to be given out to the individuals who gets damaged by this coronavirus.
Well, of course, the Bank of Korea followed suit with a rate cut of 50 basis points yesterday. It's never been this low, at 0.75%. Korean stocks still taking a beating today, though. How's the market reacting?
Yes, the Korean market did fall, but if you look at the U.S. decline, Korean market kind of closed with a 2% down, 2.5% down only, and the Kosdaq is actually up 2%. The main reason for that is because of the emergency rate cut that BOK did. And also, as I said, the futures markets are up for U.S. right now. The 50 basis point cut is something that we haven't really seen other than 2 times before in emergency meetings. The once was when there was 9/11 in 2001, and also when there was a financial crisis in 2008, October 27th. So this is the 3rd time that we've seen the emergency meeting rate cut of 50 basis point. If you look at the market ever since then, in the previous 2 cases, Korean market did recover very strongly, somewhere between 90 to 100% in over the period of 6 to 1 year. So it's all about liquidity at this point in time. Yes, there's a big concern. Of course, U.S. market recovery is very important as well. But we think that the BOK measure was something that is a indicator for market might be stabilizing going forward. On top of that, the government is trying to do a aggressive fiscal policy where they're coming out with that 11.7 trillion won of supplementary budget, including the coronavirus related funds. But they're actually raising it to 18 trillion, but there's a negotiation happening. That number is about 1% of GDP. So these additional boosting measures is quite sizable. So hopefully this passes quickly, and that will provide more stability for the equity market volatility.
Well, Mr. Yu, briefly, any thoughts on oil and gold? Some interesting things happening there.
Right. Hopefully, we need to see that oil price going up to $35 level. Right now, it has quite nicely recovered today by about 5% plus. It's now at 30.4. Hopefully, we see that number rising on the basis of the supply cuts. But still, the Russia and Saudi Arabia and U.S. needs to settle these differences. We aren't seeing that yet. Hopefully, we'll see that. As for the other commodities such as gold and silver, they're doing quite a bit of tanking. It seems that people are not really taking that as a safety net at this point in time.
Very interesting. All right, Mr. Yu, we'll have to leave it there for today. Thanks so much for sharing your insights.
Thank you very much.